Hi, and welcome to the CRIISP Alumni series. I'm Rhythm Gupta, and I'm joined here today with Peter Bakker, CEO of Unhedged. It's a pleasure to have you here today with us, Peter.
I'm really glad to be here.
Thank you. In July this year, you closed off your seed round, so congratulations on that raise. We understand that raising your first round of funding is always hard, and you achieved a significant milestone.
It is, yeah.
Thank you. And again, thank you for coming on board and sharing your insights on your capital raising journey with our audience of founders.
You're welcome.
So, to begin with, could you give us an introduction to Unhedged?
Yeah, sure. So Unhedged is a investment platform driven by an app in which we only use algorithms, AI, and like say fully automated investing to get a better result for our users. And to prove that we believe that we're better than anything else, we only charge most of our fees when we do better than the market and when we reach a so-called high watermark. So your portfolio is at its highest point. And it's really like the next generation of robo-investing.
That's amazing. And going into a bit more detail, could you give us a high-level outline of where Unhedged is of today?
Yeah, so basically when we raised our first round in December last year, so that's actually a year ago, right? We spent the first 6 months to build a whole trading engine and to build a regulatory compliance environment.
Right.
So we decided to go in a fund structure, so we use a unit trust, and to set that up cost a long while, right? But we had to also build all the software to make the algorithms which are used to trade for wholesale investors to make them suitable for the retail investors. So we spent a lot of time there. Plus we built the whole app, right? So and the app launched like 2 weeks ago. It's a very good review, so that's really positive. But now we have to onboard about 8,000 people, which we have on the wait list. So it's quite a journey so far, but yeah, really positive.
Amazing. So on that, then what would the next 6 months look like for Unhedged?
Yeah, so we start now with the waitlist onboarding, and then we release the app, let's say, in the wild, probably in February. Then we also launch a few other algorithms. So we're looking at an ESG algorithm, an algorithm that basically looks for the most social, responsible companies and how they improve in that space. And we're looking to launch a yield algorithm, an algorithm that really tries to find yield opportunities for people who are retired, who are not so interested in growth. They want to have dividends, right? The next step will be that we will be stepping into crypto. And so crypto will be very exciting because we believe that a lot of people are interested in the space, but it's just too hard. And so this type of investing we do in the stock market, we can also do in crypto. It will probably be a different app though. And then in June, we are targeting to raise a Series A, which is quite exciting. I'm already talking to quite a bit of VCs and investors in Europe and in Australia, because our ultimate goal is to export our product really quickly. So we want to open up in Singapore, UK, maybe Germany in 2023.
Amazing. You definitely have big plans ahead, and we all are looking forward to seeing the growth of Unhedged. And definitely, you going into the space of crypto, that is something that's definitely exciting me as well, because I'm always thinking of investing in crypto. Many of my colleagues have, but then it's always hard. If you don't know the right thing, then you might make a wrong decision.
Yeah, and you have to know things about wallets and this, and then yield farming.
Yeah.
In the end, what we want to do is the same with Unhedged. You sign up, you choose your risk, and then you say, okay, direct debit your money and go.
Amazing.
And super simple.
Because I'm sure that the youth today, they definitely want to invest, and like for me as well, like now I've begun on my savings, so I know I want to invest, but it's always like there's so many options available that you tend to get confused on which is the right
Yes,
one. So of course,
exactly.
like Unhedged gives us that platform on which we can
Yes.
easily invest.
Yeah. Rhythm, this industry is a little bit broken, right? Because normally what you do, you look for an investment and then you give your money to an asset manager, he takes 0.5%, he will invest it in ETFs, which also take 1%, he does it at a broker, he gets a little bit money from, or that costs money. So in the end, every year, you're like 2 or 3% in the hole. So what we are trying to do is take away all those costs and align our business with your outcomes. So if we do better than the market, you're happy to pay us, right?
Brilliant. Exactly.
Yeah, and
Very
so we really try to change the way this industry works in a very fundamental way.
That's great. I'm very excited to see that journey ahead. Now, let us talk about your capital raising journey. So, I would love to know what were the hurdles that you had to overcome during this process?
Yeah, okay. Well, the hurdles are like your company needs to have a certain momentum, right? So, and you have to be able to prove that momentum. And during your race, you have to be confident that you keep that momentum going. So, what we really use a lot is media. So we were in the AFR and we were in a few other places where people said, okay, these boys are going somewhere, right? So that was the major hurdle of finding the right timing. The second timing I chose very deliberately is to raise that round in June with the idea that if people invest in June, they can still deduct it from tax because we are an ESA company.
Yeah.
And I think the third biggest hurdle is that how to sort the people who are really intending to invest from the people who are just kicking tires.
Exactly.
Right? And that's where we feel that Wholesale Investor helps. I mean, we really use the platform a lot to screen people and to help us to find the investors that could make a real difference for us.
Right, exactly. That's what we try to do that, like through the CRIISP platform with the AI matchmaking feature. We do try to make sure that we can fix the right investors with the right clients. Actually, on that, so what is you have been with us for a couple of months now. So what has your experience been working with the team?
Oh, it's good. I mean, I'm my account manager is Jackie Chan, and yes. in my company we always make karate sounds when we say we're going to call Jackie Chan. Okay, woo! But no, he's a lovely guy, and he is really the person that pushes us in the newsletter, and so he really helps us. And when there's new opportunities, then he calls me and say, "Hey, you want to do this?" So sometimes it's a right timing, sometimes it's not.
Yeah.
But at least he's very active. I really like it. Also, Steve has been very helpful. Steve did some reviews of our decks and he gave some tips.
Yeah.
And I spoke to him a few times. So yeah, I really like what you guys are doing. It's a real enabler for I think companies that are especially passing the seed phase.
Yes.
Right. So because like we have two types of investors, right? We have investors in the companies, which become shareholders, but we have also investors in the fund who basically take their money, put it in our fund, and then we trade it through the algorithms and the AI. Right. So a lot of current investors we have now, they come through the platform. And the good thing is that they can see everything. They can see the result. They can see a lot of other things.
That's really good. I'm very glad to know that. Now, talking about, the conversations that you have with investors,
Mhm.
what was your experience like when you were closing off the first round? So how many, like roughly, how many investors did you have to speak with?
Yeah, so in this round we had a crowd-funded effort, right? So which you usually don't speak to investors, but and then we filled it up with what I would say technical investors, and so I spoke to about 30 and about 20 invested. So that was a really good score.
Yeah.
I would say I was really proud, like,
Definitely.
whoa, more than 50%.
Yeah,
But
exactly.
because no, in my first round, I spoke, I think, to something like 200 people, and we had 17 people investing, which
Yeah.
is also for pre-seed not bad,
Mm,
but it's tiring.
definitely.
And what
Yeah.
really helped me now is in the platform, in wholesale investors, I could see their background and I could see where they invested in already,
Yes.
and which helps me to determine whether they know fintech,
Yeah.
whether they invest in companies that are disrupting or not, but also sometimes they're competitors, right? So I see where they work. So I also check LinkedIn to
Yeah.
see if they are not wanting to invest as a competitor.
That's a really good background check that you do on the investors. Actually, on that, I have a two-part question.
Mm-hmm.
One would be like, which you just said that, you check for if they have invested in other fintech companies.
Yeah.
So my first part of the question is like, is that a very major requirement for you to have an investor that has knowledge of fintech as well?
No, not really knowledge, but it's more like where do they come from? What is their ask them what is their theme for investing, right? And if their theme for investing is just to make a lot of investments, then they are not going to be very much value add for me. But for example, one of my investors used to be the GM of Comsec, right? Great guy, and he helps us, right? So that means that if he asks me like, "Hey, I like your platform, can I invest?" Then I have someone who understands the industry and who can help in the future. And so those investors are very important to me. Um, they don't have to have fintech experience necessarily, but it helps that they have already invested in startups, so they know that the road to success is not linear. It's it's a hard road. You must like that, um, and they have to have the tenacity to basically hold on, right? And so
Have patience.
yeah, have patience because what we're doing is quite different, and how we want to play this game out is going to be pretty disruptive. So, and it takes guts, right? Because yeah, so that's the main thing I think.
Completely understand that. And my second part of that question, following up on that, would be like, what is the right profile of an investor that would, fit the criteria for you?
Ah, so for the fund, so there's always two things, right? So fund investors are basically anybody can invest, right? And if it's a larger investor, we give them the royal treatment through our help desk. If it's a smaller investor, they can do it through the app, right? So that's one thing.
Yeah.
But an investor in the company, so to become a shareholder, I don't have any fixed criteria. The main thing I want to see is that they invested before. So I don't want to be the first investment.
Yeah.
Because in my past, because I had already a few companies,
Yeah.
in my past I had a few times like really novice investors, and they will call you every week, like, "What's going on?" I said, "But that's not our role. Our role is my role is as a CEO and my team to make sure this is a success. The more time I spend with shareholders on the phone, the less I can build a business, right? So that's I think the major criteria. And if they're very novice, I actually take them, but I make that very clear. Like every 6 weeks, you get an update.
That's amazing.
And if you want more, just email me, and then if I get the same question, I send another update. But and what I often do is with bigger investors, they often invite me to lunches or dinners, or and I'm always happy to do that.
So it's always like building that relationship with them, staying in touch with them.
Yes. I think that's really important, because they give us their funds, but not only their funds, but also their trust.
Yeah.
And that trust is very hard. It's very easy to lose and very hard to win back. So I make sure that they know what's going on. And I had a few compliments of my investors who said, "Oh, you run a really tight ship when it comes to investor management," and that's correct. I'm very keen on not making the mistakes I made previously.
Right. It's always about keep learning from your mistakes and then
of course. Yeah, and so another thing that for me is very important, that all documents are the same.
Yeah.
So people who want to have different documents, I always say no. The share class is always the same. If you want Series A, then maybe we can talk about preference shares. But in these rounds, it's all straight equity. So that's also a little bit of a filter. If people start to talk immediately about I want preference shares or I want this, then I say, sorry, I only do common shares, same rights. We all have the same rights. We're all pointing in the same direction.
I think that is very fair for all the investors investing in opportunities.
Yes, because what you often see is when a company becomes very big and Series A, B, C, D, E, F, that all these investors who are investing in a later round, they have different rights. And sometimes it's even so that for some tranches, it might be better to sell the company, and for some, it might not. So they're starting to fight because their incentives are not aligned. And I've seen that a few times, and that's so distracting.
And then, like you said, that trust is very important. So I somehow feel like that would, divide the trust as well. They might end up
in between the investors. Yeah, and then people don't have the same incentive, and they don't have the same goal. Yes. Which you often see in later rounds. But so I'm keen to keep this as long as possible, as simple as we can.
Amazing. Very good on that. Okay, now let us talk about the journey of an investor who has expressed interest in your business and they have decided to come on board. So what is your due diligence process with that investor?
Well, if it's a wholesale investor, right? So if they invest, then I need to see the wholesale certificate, right? What is it? S708 or something. So that's important. And then what I use a platform called Cake, which basically steps us through the process. So the due diligence is before I give them an offer. Okay. Yeah. So I never give them an offer. Most people who I give an offer follow up, right? So I don't give an offer just out of people checking things out. So the due diligence they have to do on me, and I have to do on them is before that. And it's primarily about what I said before. What other things can you bring except capital? Right. And that's the most important thing. So can I use your network? Do you have maybe services in your business that I can use? Yes. Or can I use your business as a distribution point? Exactly. So I'm always looking for, okay, capital is one. Yeah. What's more?
Exactly.
And that's the process itself is very simple. It's just I give them an offer, and they log into Cake, and then they say yes, sign, and I say yes, sign, and it's done. right?
Amazing, very simple. Okay, now talking about that, you said like in your first round you had around 200 conversations that you mentioned,
Yes.
in which you were able to get on board a couple of investors from there. So the
17, yeah.
ones that said no to you, so what is your process with them? Like, how are you keeping in touch with them?
Yeah, so I have several lists in the company. We have customer lists and we have prospective investor lists. And so after a conversation, if it's positive or negative, if it's positive, then, you know, I send them the documents.
Yeah.
If it's negative, I say, do you want to be kept up to date? Is this going to be potentially in the future in your investment thesis? Most people say no because of a few things. You are too early, often, yeah, so it's too risky. Or they basically don't like the industry somehow. That's I think the main reason. I mean, I have a really, really good team, so most people are super impressed by the team. Our concept is pretty good. We have a wait list of 8,000 people. The fund is live, it's trading well. I'm a bit embarrassed to say, but in last month we did 7% return, which is ridiculous, right? Because the market went actually neutral. But yeah, it's why would people say no? Well, as an entrepreneur, I would probably say, I don't know. We're awesome.
Definitely, it's a question that's hard to understand. But actually, on that, I'm keen to understand. Like, do you feel that now that you said like you are looking to step into the crypto space as well, and we know we have a lot of crypto lovers here. So, do you think that that would help build up that confidence with investors, and you know the conversion rate as well would be better moving forward?
I don't know. I mean, crypto investment is a very different game, right? Very, very different. And the investment thesis is probably something that people would be attracted to. So, but they would invest in the fund, not so much in the company that does it. The next round we'll do, as I said, is Series A. So, and in Series A, you're usually talking to strategic investors or to VCs, right? So for investing in the business, I think for VCs and strategics, it would be for them good to see what we do with crypto because we are doing it very differently. But for the fund itself is just your own risk appetite because crypto is super risky, right? Yeah. And I cannot take the risk away, but I think the way we are going to do it with algorithms, with alternative data, with on-chain data. So on-chain data is basically data you can generate by looking at the blockchains itself. That will give us an edge on when to be in or out the market. And I always say to my children, the question is not how much you can win. The question is when do you sell? And by losing less, if you lose, you win more. So
that's a very good takeaway from this interview. Thank you for that. Now, finally, before we close off this interview, could you give us one piece of advice to our founders watching this interview?
I think on one thing I really align with Steve, and that's that agile fundraising, I think, is the best way. So it used to be that you really define, you know, Series A, B, C, D, etc. But in the end, there's two things a founder should always do. You're always raising and you're always hiring.
Very true. That is Steve's motto as well. Always be raising.
Always be raising, always be hiring. And because you don't know when you find an investor by serendipity that adds so much value to your business or to your team or has advice. I mean, we have like the early investors of Zip on board. We have people who are involved in companies like Stake. So all these investors, they know so much about the industry, and they know also how we are different and how we can emphasize that being different.
Right, exactly. Thank you so much again, Peter, for sharing your insights with us. And thank you to our audience for joining me on this journey. And I hope you got to learn. And all good luck to yourself and also to other founders in this space on your capital raising journey. Thank you.
Cheers.